Today, folks, you are losing global purchasing power. Our beautiful Canadian dollar has lost 3% of its value in the last damn month, and I am personally taking advantage of this by selling some of my US dollar denominated assets in my corporation, like my S&P 500 stock, to start converting a little bit of it back to the Canadian dollar, which we're taking advantage of these all-time low values in our currency and the all-time highs of the US stock market to pay down our mortgage, to increase our tax-free savings accounts. And I need to talk about what is causing this, because it's actually more political than you might think. It's not just interest rate sensitivity, but we're going to talk about politics in the stock market right now, and it's having direct effects on a lot of stocks that I personally love. We're going to talk about stocks that are getting devastated even though their earnings crushed. It is such a weird time to be alive, and if you are trying to fight to that path of financial independence, the damn well one day retire early, that noble journey, subscribe, join me on that journey, and consider hitting that like if you enjoy this kind of content. So we're going to roll back to the portfolio in a little bit, but I want you to just take a listen to this Jerry Rig Everything talking about his Cybertruck and some of the issues that he's been having with it. They're not the issues you might think.
It was at this point in the video where I segued into a rather glorious sponsorship integration. And when I finished the edit and sent the video off to the brand as a preview, they responded back, and I quote, "We would rather not be featured alongside Cybertruck content at this time," which is 100% understandable and actually speaks volume to the polarization of the Cybertruck when a well-respected brand that you've all heard of decides not to be featured alongside a Cybertruck because it would hurt their brand more than help them.
So Jerry Rig Everything is basically boiled down to selling his Cybertruck more or less just because of the division that's going on with customers, everything on his YouTube and social platforms when it comes to sponsorships, because of the division in politics. When you really zoom out and you look at US politics, primarily which is going on is what Elon would probably refer to as the woke mind virus, the freedom of speech, the rhetoric, the jokes that probably take it to a little bit of edgelord, whereas the other conservative side doesn't necessarily agree or see it as professional or something that should be run in a presidential election, which, if we zoom out even further, I hate politics. There's a lot of lying. It's impossible to figure out what the hell is actually going on. And now that we're seeing CEOs get involved in this rhetoric, it is actually causing a direct effect on products, on, actual buyers of consumers, when I think as a CEO, your primary goal is to make sure that your product is better than everyone else's and has the most opportune capability to reach everybody, and you shouldn't be involved with politics. Now, it's just, again, my personal opinion. Again, if Trump wins, it could greatly benefit, Tesla and Elon being, directly involved, or it could hinder it too in situations of division like this. Now, why am I talking about this? Well, this does have to do with the Canadian dollar. Well, it has to do with policy, like policy that's going to directly affect you and me and Canadians and US citizens when it comes to tariff conversations. And I just want to be very logical about tariffs and what this could potentially mean for Canadians specifically, but again for US people as well, as Canada already is in talks to avoid Trump's tariffs. Basically, under Trump's proposed 10% across the board tariff and assuming broad-based retaliation by Canada on US imports, the Canadian economy would be hit hard. I mean, real GDP would fall around 2.4 percentage points over 2 years relative to the baseline projections. We go a little deeper here. I want to give you an exact example of what tariffs do, because they're just, imagine the government's a big business and they just say, hey, if you're selling goods here, like, we need to take more profit or whatever. As soon as you're trying to make money off our country, hey, we want a piece. It's like a mobster over here, like, give us a piece. And that's what Canada just said to Google. They said, hey, if you're going to make money in Canada off Canadians, we want a piece of that. Mobster style, give us something here. We're making policy against it. Google said, sure, we're not going to fight you. We can't win against a government, but what we're going to do is just charge your people and anybody that wants to market to Canada. So now if I want to run ads as a Canadian in Canada, I'm getting hit with an extra 2.5% surcharge tax. That is a reality that is just so absurd, right? Like, I mean, you think that the Canadian government wants to benefit us and help scale our businesses. No, they just want their tax dollars and they think the big company's going to pay for it, but you and I end up paying for it. That is exactly what tariffs are probably going to do. Now, I'm not here to talk about policy. I'm not here to talk about these things are being good or bad, but what I am here to tell you is this is another reason that the Canadian dollar is dropping. It's another reason the dollar is being sold off out of fears of the lack of demand for our currency that's, ahead of us here. It is due to interest rates as well. We cut interest rates too aggressively, too early. People throwing money into U.S. money market funds still, locking in some bonds, whatever they can at higher rates. Like it's just really detrimental to us as an economy. We're going into a new phase of the Canadian economy. And again, usually these are cyclical, and I don't know how low the Canadian dollar is going to go. It's why I'm cost averaging out of my U.S. And I mean, I'm not talking about selling all my stock. Like, come on, I'm not bailing on the market. I'll probably keep buying those shares back in my tax-free savings account. But for the moment, it's like, hey, the dollar is just so opportune here to convert. So let's just do it and play the cyclicality and cost average through it to hopefully we get the best, medium prices. It just seems like a better time to be doing so. But we're in a weird time for the markets. Very, very weird time, folks. I mean, we talked about this last week about how most stocks are beating earnings, and yet their stock prices are going down. And that's because I think we're in an overvalued territory where we're either going to flatline or start to correct because we've just run so damn much, so damn fast. And when people start getting giddy and your grandmother's talking about AI stocks, it's a good sign that we're going through another one of these cyclical roller coaster like cycles, right? I mean, look at PayPal here. PayPal's down 3%. SoFi crushed earnings. You read the headlines. SoFi raises guidance post Q3 beat. Why is the stock faltering? You could say the same with McDonald's and Pfizer. McDonald's raised their damn dividend. But what I really want to point out too is that these companies' earnings aren't as good as they were in the past. And let's just take a look at PayPal here as an example. So if we actually just take a look at, first and foremost, the revenue side of this, you can see that revenue is like stalled out from where the real growth period was coming into 2021. And we're kind of in these high single digits right now, right? Which is more in line with a traditional, more refined, older company that's kind of grown into itself. But like many companies out there, look at the record share buybacks. This is something you're going to see over and over and over again. This is what companies do when things aren't as rosy as they want to be, but they have free cash flow disposable, right? They're like, oh my God, we can't innovate in this market. Things are so hard. What can we do to manipulate the books? Because companies that buy back shares and have growth, at least a little bit of growth, they can really increase their earnings per share. I mean, that's literally like Apple's playbook. I mean, Johnson & Johnson was another good refiner of this. If you take a look at Johnson & Johnson, a lot of people are talking about this stock right now and if it's a good buying opportunity because the revenues have recently just started to come back a little bit, but again, high single digit growth. But you go back to those shares outstanding and we're talking about record share repurchase. This is something that I think is a true sign of the times, especially when, Tesla pops up 20%, like the best single day it's had since like 2019. And it's all on the back of just, refining the earnings per share, but has nothing to do with actual revenue growth or parts of the business starting to substantially make up for the lack of auto sales. We're getting there, but we're not quite there yet, right? Which caused the stock, again, to drive to extreme valuations. So I think, again, if you just look at growth stocks, AI stocks, and the conversation that goes on, I think earnings are great. I think we're heading into a very healthy market environment where things are correcting. Things are coming down a little bit. At least that's what I hope happens when we see Google post, Meta, Microsoft. Meta's now trading back at almost a 30 times multiple, which, I'm not complaining about because we have direct exposure to Meta. But the problem is, we can't keep seeing PE multiples continually go up and not having like insane robust earnings to back it. And when I see companies focusing more on share buybacks than innovation and other things, it's just a sign of the times, in my opinion. Now, where we go from here, again, I am not going to make a solid prediction. I think for as long as interest rates continually get aggressively cut in Canada against the US, the Canadian dollar might falter a bit more here. What we really need to see is this election we just got to get through the other side of this election. We got to get back to a nominal place of understanding of what's going on with policy and just getting everybody back in a correctional path where we're not bleeding this all the way down to, hey, like everyone's starting to make political decisions about their dollars being spent. And hell, even I am right now because of the advantages that this is giving me. And I'm privileged to be in a position to take advantage of it. And I hope you are as well. But obviously, if you don't watch these videos, you need to subscribe because it's how you can become knowledgeable about this stuff. It's not financial advice. These are just my personal opinions. But I hope you've learned something. And I'd love to know what you think in that comment section below.